I request the audience to be interactive and ask questions for the panel members. There is still lot of chocolates waiting.
సార్
So,
మాట్లాడేది నాలుగులో ఉంది.
meanwhile, any remarks, madam? You just want
ధనుంది
you
సార్
want,
మాట్లాడేది ఒకటి.
Indian stock
Guest
market
మాట్లాడేది నాలుగు.
reforms post 99.
Myself, Madam Vishwama. I am from financial background. Actually, Indian stock market, not only Indian stock market is very sensitive. When I was in a PhD scholar, I did my PhD thesis on mutual funds. So I worked a lot. Whole day, night, I spent up to 6 months. I spent because previous day value may not be the same and the next day. So that's why I spend more time. Really, it takes 7 years of the time for completion of my thesis. So it's very, very sensitive. Right now we are having so many platforms to identify the values like risk return and shopper values and trainer values. Like Morningstar.com, valueresearchonline.com. These are all the platforms we have for identifying the values. And coming to the stock market is very sensitive. We are having in our curriculum, MBA curriculum, we are having 2 types of the analytical tools. These are technical analysis and fundamental analysis. With that help of the technical analysis and fundamental analysis, we can easily identify, we can predict. Sir already told, like Warren Buffett, he said in his room, and he is earning some crores of the rupees per day. Like Jujanwala also, Jujanwala wife right now, she is earning some crores of the rupees right now. With the help of more techniques, we can earn a lot of money. Okay, at the same time, after dematerialization, T plus 1 day, it will be converted into the cash. So this is a very boost up to the investors. So thank you for giving this opportunity. Thank you.
Any queries from the student side? Or otherwise I will ask. What are the names of the depositories in India? 2 names. Question to the students.
Krishna.
NSDL and CDS. Very good. Who is the regulator of mutual funds? Who regulates mutual fund industry? Pardon? AMFI is voluntary regulatory body, but real regulator, statutory regulator.
Somebody is raising their hand there.
SEBI. You said SEBI? Yes, right. AMFI is also there, but AMFI is a voluntary organization of the industry. But regulator means in terms of government regulation statutory is SEBI. Very good.
One more question from Professor Kiran sir. The chocolates are waiting. Questions to the audience. You want to ask? Yeah, please. Thank
You
you.
can ask questions.
Yeah.
I want to know about how debt market works, like money markets, how the debt instruments can bought and sold in markets.
Yeah, right. Actually, it's a very good question. Actually, this stock exchange belongs to capital market. Am I right? In the same sense, we have debt market also. When compared to the capital market, the size of debt market is so huge. Actually, the volume, the value of debt market is so high when compared to the stock exchanges trading together is concerned. There is a separate segment in both BSE and NSE for debt market trading itself. If you see the screen, cash segment, debt segment, separate will be there. And RBI being the largest player in the debt markets, RBI is also actually, because a lot of money market instruments are traded with the help of RBI support, like treasury bills, certificate of deposits, CPs, intercorporate deposits. You said a very right question. So debt market, normally individuals we are not that familiar. Institutions are familiar. Mostly corporates as well as bankers will participate in debt markets. And now because India is liberalized, most of the mutual funds or pension funds or gratuity funds of other countries can invest their money in both debt instruments and equity instruments in India. They bring in the form of foreign portfolio investment. So that means India is open for debt as well as equity investment by foreign mutual funds also. In that sense, you should do more research on that. There is a debt market segment, and first of all, you should know the money market instruments. But normally, the money market instruments are short-term in nature when compared to the capital market instruments, which are best to be the long-term. For example, once the equity is issued, that's all. There is no obligation on the part of the company to buy back the equity unless they are interested in to reduce the equity. So in that context, the time tenure is different for debt and this. Most of the debt market instruments are fixed in terms of returns. Fixed returns will be there like interest as you all know. Just like equity will be traded at premium or discount, debt instruments or bonds are also traded at premium or discount. So you should know how to calculate bond yields, yield to maturity, such kind of things you have to understand. Normally debt instruments, the pricing will be based on the inflation and the interest rates which are prevailing in the outside market. If the interest rates are increasing, the bond, the yields will change. So in that context, sometimes I have taken my housing loan first time at 17% per annum. Can you believe? When I purchased my first house, in 1992 or 93, the housing finance company charged me 17%. Today it is around 8 to 9%. Nobody believed the interest rates will fall down in India at that point of time. Even the bankers doesn't know. Even UBI Rajalakshmi scheme is there. They promise you, give 2,000, you will give 1 lakh after 21 years. After 5-7 years, they withdraw the scheme because interest rates have fallen. Nobody expected that. So my suggestion to you is, you just follow all the macro economic indicators continuously. That's what I just mentioned. Even the world is under grip of inflation and recession. India has survived. So it was beautifully managed by RBI. Even the governments will put a lot of pressure on them to release the money. RBI is very strict in India thanks to the acumen of the knowledge created by the successive RBI governors. In that sense, India is safe. I think I just touched the peripherals of your question, but you should do a lot of research. There is a huge data is available. I think we can add.
Yeah, to add to sir's opening remarks, what you're basically looking for is to understand fixed income securities and analysis. So there is a very beautiful book written by Frank Fabiosi and Stephen Mann, which you should probably buy it on Amazon and have it with you. So debt market, as he said, rightly said, is multifold the times of equity markets, simply because the institutional participation in debt markets is extremely high. If you were to just take the municipal bond market segment of the debt market, the quantum of outstanding issues is about $4 trillion. This is just US markets. If you were to just Google on, just go to Bloomberg and you were to try to search green bonds, every waterway, every port authority in the US has issued green bonds outstanding. Fixed income securities is one of the favorite instruments for pension funds to use. Before you grow your capital, you have to preserve your capital. And preservation of capital happens in the fixed income markets more. Whereas you go to the equity markets to have that explosive growth. So you have the sovereign debt market, you have the corporate bond markets,
you have municipal markets, and the very important securitization, asset securitization markets, wherein housing mortgages are packaged and they are sliced and diced and sold further to investors who may want to take an exposure to, say, a Japanese housing market. So the originator is a Japanese bank who has gone out and loaned money to various Japanese people to buy their house, and he sells those loans to a Goldman Sachs, who then issues their own security, and you buy that security. You are a pension fund, let us say, operating out of, let's say, Bangladesh. You buy that and then you get interest from Goldman Sachs. So this is the concept of securitization. So it's a multi-trillion-dollar market, and you will require at least 2 years' time to even kind of get a decent grip over fixed income securities, because it's a very technical end of the market. So I always tell people that if you really want to know finance, then you must know currencies, what sir was talking about in the morning, and fixed income securities.
I just wanted to add only one point here, since we are talking about the bonds. FTR Masala Vinitara FTR Masala XYZ. Similarly, in bonds also you have Masala bonds. The Indian government has allowed the corporations to issue the foreign players to get the foreign currencies in the name of Masala bonds. Because each country has got their own terminology. I think in Chinese or Japanese, I am not very sure, they have samurai bonds. So that the same lines, the RBI has allowed the organizations to issue the Masala bonds. The other one is, when it comes to the bond market, Reliance has got a very good history in that. They have issued the bonds which have got a maturity period of 50 years and 100 years. And we must thank the investors, the kind of confidence that they have on Reliance. Because we don't know after 50 years what's going to be, or after 100 years. But they issued, and they have mobilized huge money in these bonds. Thank you.
Yeah, I think you got the answer, no? As a part of liberalization, actually, Indian companies are allowed to take the money from outside. There is a word called foreign currency convertible bonds, FCCBs. That means you will get money in Indian rupees, but you have to pay them in dollars. Then the other country people are interested in giving loans to, subscribing those bonds to India. So in that sense, we have liberalized to large extent, and we are confident. As I just mentioned in my opening remarks, 1 billion to almost 600 billion foreign currency reserves are there now. That means now we have the bargaining capacity, we have the cushion. So we can come and respect because we have reserves with us. Our economy is backed up with foreign currency, gold as a reserve. So in that sense, whatever money you are printing, there must be some backup. So that is the beauty of Indian economy today. So India is the best place happening in the entire world in terms of economic development is concerned. So you should take advantage of this. That is my humble request.
Sir, Rajesh, we will take more paper presentations, then we will question here only. We will finally take the presentation. Karim sir, can you call that paper presenters who are shortlisted by you for this panel session? You please load your PPT.
After presentation, breaking the glass ceiling. Glass cliff. Glass ceiling. Okay.
It is the audience to be interactive, and good question also will get chocolate. Not only the answer. Now I increase the stakes.
Sir, presenter.
Good afternoon, dignitaries, my dear participants and my dear students. Myself, I am Dr. K. Research student. Yeah, today my topic is about the breaking the glass ceiling, but captured by the glass slip, review evidence and examples on the impact. This paper was written by Dr. Akhtar Sultana and Dr. K. Research and Samsung. Okay, written this paper. It is in development stage. The so much of the research is going on. It is under process. The main intention of this paper is, okay, the corporate ladder is very difficult. Corporate ladder is very difficult because the woman, it is very difficult for the woman to get the higher positions. We have seen, okay, past 50 years, the past whatever we have said in 1992, from the 1992 to now presently, how many of them are they become as MDCs? This is our question. Okay, not a question. We have raised this question in our perspective and we have developed this paper. Okay, it is purely about the literature paper. It is not about any type of, it means the survey-based paper, because we were unable to approach the top level management. That's why it is the review-based paper. Okay, here the concept of the glass ceiling. The glass ceiling is, we have to think about the, like the women are absolutely, they will not go into the top position. This is known as the glass ceiling. And then we have to, okay, the glass cliff. Here the glass cliff is, okay, the organization, the woman is unable to acquire a top level of the position. Okay, the organization, especially in the organization leadership, especially the men are playing a dominant role compared to the women. Okay, in here, the term glass cliff, the men are, okay, in this glass cliff, they are represented there. The position of the leadership, when it is found, it is in a good position, okay, the men will be there. When it is in trouble at that state, okay, they are appointing the women and they are blaming the women, okay, because of you, this is happening like this. Okay, these things are going on. That's why the women will not be, women are not be in a leadership position. This is one of the cases we have identified. And then the literature of review, they have Aslam Atel.
Request us to conclude because the flow is getting affected when the financial market. So that is just good conclusion.
Yes, sir. Thank you. Okay, my conclusion is about we have to encourage the woman, okay, in the perspective of, okay, the using the facts of the support of arbitrary judgments when describing the success and plans, providing the track for the women's leadership and development, deploying the hiring the participants to eliminate the impact of unconscious prejudices. This is my final conclusion, sir. Okay. Is there
Maybe you have to write women in capital market or women traders in capital market next time. Women investors in capital market.
Yes, sir.
So
Definitely.
that the families will resonate with your topic. Thank you, sir.
Thank you.
Next, Karim sir.
Sir, just a minute. On behalf of the audience, I want to ask you, because I have in my mind there is one question. Okay, I have faced this question but unable to give a right answer for the audience. Okay, that question I will raise you. Okay, I have heard from the so much of the right intellectuals this question they were asking me. I am also asking people. Okay, we have to see in throughout of the world. Okay, there is an inflation going on. Okay, but you see, compare the Russia, because of the Russian Ukraine war, the inflation is going on.
We will take that at the end. Sorry, after the panel.
Yeah,
Panel. Next, Karim sir.
Thank you for raising a very important question about women leadership or women supremacy. Even a country like USA could not elect a woman president for the last 400 years. So we are far ahead. Actually, recently, at least one woman director, independent director should be there in every board. That itself is a great step due to the change in the Companies Act recent amendment. Next.
Next topic.
Thank you. Dan lagi baru.
Good afternoon, everyone. Well, myself, Dr. Sheikh Salim, and I work for VIP Business School here in Chennai. And this is which we would like to present in front of you. It is being co-authored by Sheikh Salim, Associate Professor, Department of Management Studies, Law and Engineering College. The title of the paper goes Firms Characteristics and Profitability. And this study is related to food and agro-based product firms in India. So when we talk about agro-based product industry in India, so we can see that India produces 270 million tons of food each year. And again, if you look at the value of the food processing sector in India, it is anticipated to be $380 billion, with a CAGR of 11%, expected to take it to the $540 billion by 2025. So keeping this part as an important thing in the mind, we decided to go for a study in this particular area. Well, so at macro level, yes, we are supposed to talk about industry, but when it comes to micro level, yes, we are supposed to focus on the perspective of a particular firm. So here, if we see that every business, focuses on the long-term sustainability, and for this long-term sustainability for the business is important to get more profit. So thereby, it is very essential for business to look at its profitability, and at the same time, business has to look at what are the various factors which affect the profitability of that particular business. So keeping this in mind, this presentation has been carried out. Thereby we are looking at the firm characteristics and how these characteristics are going to influence the profitability of the business. So coming to research objectives, so study goes with 4 research objectives. First one is to assess the relationship of profitability of the firm with its liquidity position, and the second objective is to investigate how profitability is affected by the inventory performance. Third objective is to examine the relationship between firm's operational efficiency and its profitability. And the fourth objective is to examine the relationship between working capital and the profitability of the firm. And these are the hypotheses which we have framed. The first hypothesis is all about there is no significant association between the firm's liquidity position and its profitability. And the second goes with inventory performance does not influence the profitability of the firm. Third is operational efficiency has no positive influence on the profitability of the firm. Fourth one is working capital does not influence the profitability of the firm. And coming to the research methodology, so the industry which we have taken is food and agro-based products industry. And the number of firms which we have taken is 1070, because we have taken few visitors, and we have downloaded the data from the Center for Monitoring Indian Economy database, that is CMI database we have used. And we got 1070 as a sample for the companies for which we have all the data for all the selected variables. And the data period is only for the 1 year, that is for the financial year 2021 to 2022. And this is our research model list. So we are looking at the effect of liquidity, inventory performance, and operational efficiency and working capital. These are taken as independent variable, and profitability is taken as the dependent variable over here. Firm size and leverage are taken as the control variable over here. And this is the research model which I have to give the mathematical expression. And the statistical tool what we have used in our study is quantile regression. There is a reason to go with this particular regression is because if we go with least squares method, then we have to go with its assumption. So when the data is unable to meet all such assumptions, yes, in such case we can go with the contrast regression. And coming to results and discussions. So for profitability, we have used return on asset as a variable. Firm size is represented by log of total asset, and leverage debt to equity ratio represents, current ratio represents liquidity. Finished goods inventory ratio we have taken to talk about inventory performance, and the net fixed asset utilization and employee utilization we have taken for operational efficiency, and for working capital we have taken net working capital cycle and days. And this is the descriptive statistics of all the selected variables what we have taken. Coming to the major findings of the study, so we carried out the contract regression at quantile 10, 25, 50, 75 and 90. And what we have found overall in this is that size is the factor which plays an important role and affects the profitability of the company. So if you look at the regression coefficients related to the slide, so we can see for all the quantiles, the regression coefficients are significant, and we can also see with the of the higher quantiles, the regression coefficients are greater. And the next important finding what we have found is related to leverage. Though for the lower quantile firms, the leverage is insignificant, but at the higher quantile, yes, we have found a significant influence of the leverage on the profitability of the firm. So what we would like to conclude is that size plays an important role and has significant influence on the profitability of the firm. And next, if we talk about leverage, then at higher quantiles only we have observed the significant profit on the profitability. So this is what the work we have done. Yes, we have to work more on this. Thank you.
Any questions? Comments from the audience?
The reason why we are going to the contract regression is because when we have to carry out least square method or ordinary least square regression, we have to make sure that data is meeting certain assumptions like normality. So, which is, and therefore when it comes to contract regression,
The data is not meeting the criteria.
yeah, financial data, most of the financial, many times financial data doesn't meet the
It's the wrong assumption. Probably it's you have taken only 1 year data.
yes.
And if you take more years of the data, then that requires you to keep that put the statistics. There's a requirement that's required for the OLS can be met. Maybe 5 years or 10 years of data you can then try for it. And I think when you are saying that you have dependent and independent variables, well, this independent variables are affecting the dependent variables in the data. That's the whole purpose of the regression. So by just making it a different bucket, and transference, since it's a work in progress, we can re-look at the
But as we have gone with 1 year data, so for which we have found it is not meeting the assumptions of the regression.
The data period itself is wrong. If you take more years of data.
No, even with the more data
Normally
also,
it is covered the time series. So you have to take more years of data and you will meet the requirements of the OLS and the results will be
of course, for that we are also going to the normalizing and transforming of the data. That we are in the process of that. So, as you said, yes, we will do with the data for the one number of years. And of course, we are supposed to go with the transforming and all those things.
you may not need the transforming, but you can take the results and put them into the log value. Automatically it will suffice.
So we tested that also, but somewhere it was missing for us.
That's
So,
what, but since you have taken only 1 year of data, That could be the reason. You have to try a larger data set and
Sure, I will definitely take those notes. Thank you. Thank you. Hello, sir.
A very good afternoon to everyone present here. I thank Narayani College for giving me the platform to present my paper. So myself, N. Praveen, I am a research scholar in Wales University, Chennai. So today I am here to present my paper on the topic. An approach of ALM, that is asset liability and management. So before I take up the presentation or the research paper, now for students, I want to ask you one small question. The question is, now, in case if you want money, what do you do? If you want money, what do you do? Fine. The first row sitting there, second row, first one, boy. If you want money, what do you do? You do business. Okay, you do business, right? Now, for business you need money, right? Okay. See, if the money is not sufficient for you, what do you do? If the money is not sufficient for you, what do? You take loan. Very good. As soon as you go to bank, so if you approach the bank manager, will the loan will be sanctioned to you? As soon as you go to bank, for example, let us assume you want 10 lakhs rupees loan. Okay, you'll go to bank and you'll be meeting the manager and you'll be asking, I want 10 lakhs rupees loan. So will the bank manager will immediately sanction the loan to you of rupees 10 lakhs? No. Fine. Okay. So that is first one. Second one, please room. Now nowadays, say in case if you want to take the money, borrow the money, so you have to go to bank, fetch your documents or securities, etc. and you have to buy. And yes, okay. So let me come to the presentation. Now, so my topic is asset liability and management. So here the assets means the deposits which the bank receives from the public, and the liability means the loans which the bank lends to the public in the form of loan. And next one, now coming towards, now here asset. So here the banks will raise the fund in the form of deposits. So whatever the deposits they receive, so that will be given in the form of loan to the bank, to the person who are in need of money in the form of loans. And next one, so now once the loan is approved, so before the loan approved, the document should be verified. So in case if it is verified, the loan will be given. It will be approved.
IT object service data mining.
It is missing. So now once the person doesn't pay the money, the banker will give a notice, and in case if the for a notice, if the person doesn't respond, so the loan will be yes sir, yes sir, yes sir. Coming towards the conclusion, yes sir, yes sir. some of the banks has been merged due to the COVID. And coming towards the analysis, I've taken the analysis of the credit deposit ratio. So I've taken the 5 years for doing the analysis. So in 2018 and 19, so the ratio was little bit reduced, and in 2013, so again it has come down. And coming towards the asset deposit ratio, so in the year 2018 and 19, so it was an increase, and again coming towards the 2022-23, so there was a high in the current assets. And finally, the cost of current ratio, it was in the year 2018 and 19, so the ratio was 2.25%, and finally, so in 2022, so it was around 2.25. So it is the concept. And coming towards the conclusion, as you all know, so every bank should maintain the ALM management. They should know how to manage assets and liability and how to gain the profit and not gaining the loss. Thank you all, and thank you everyone.
Thank you, sir. I request comments from Kiran, sir.
I request you to please relook at your definitions, because the public deposit is a liability to the bank and the loans the bank makes is the assets to the bank. That's why it is called a non-performing assets when your loans go back. So at the ground floor level, the definitions becomes very important for you to build the superstructure on. Please look at the definitions once again. Thank you so much.
Thank you.
Comments from Congress. Next paper. Karim sir. Next paper. I request the paper presenters both your title, objectives of the study, data analysis and conclusions. That pro must be there.
Good afternoon, everyone. So my title is a study on fundamental analysis of selected Nifty IT stocks, and myself, Ala Venkat Subbareddy from Vikram Sambhu University, Department of Business Management. I have taken this project, I have taken this article from my project under the guidance of Dr. J. Vijayenda and Dr. V.L. Manikanta sir. And let's start with the introduction. And we all know stock market is a place to bring the thousands of market participants to buy and sell the shares of public listed companies, and which is regulated by SEBI in order to ensure fair trade practices and transparency transactions. And we all know we have two capital markets, and NSE and BSE, and these stock markets are the facilitators to raise the capital for the expansion of the business or to achieve the profit maximization. And coming to IT sector from the stock market point of view, and Indian IT sector plays a very crucial role for the development of economic growth of the country. And to know the financial picture, to be investing in stock market, the fundamental analysis helps more. And statement of the problem, the fundamental analysis helps in predicting the long-term trends and to investment whether a company is good to be investment and whether a strong potential is there, and for the giving proper decision making to invest in the stock market. And objective of the study is, I have taken two objectives. One is to analyze the performance and growth of the selected Nifty IT stocks and to offer suggestions, if any, based on the fundamental analysis. And research methodology, I have taken the data is taken from the secondary data, and the data is collected from various sources such as internet, money control and websites of selected companies, and the analysis of the data is done with the help of fundamental factors, and the data is taken from the last 5 years from 2017 to 2022. And these are the fundamental factors to be considered in this study. Net sales, revenue, EPS, price earnings ratio, book value, debt equity ratio, dividend payout ratio, promoters holding, and net profit margin, ROCE and ROE. And these are the nifty IT companies registered in the NSE, and Coforge Limited, HCL Technology, Infosys, L&T Technology, and LTI Mindtree, Emphasis, and TCS, Tech Mahindra, and Wipro. So after analyzing with the help of fundamental factors and the last taken from the last 5 years data, these are the results, consolidated statement of various fundamental factors in terms of compound aggregate growth rate CAGR of selected IT companies. And Coforge Limited CAGR percentage is 17, and its revenue is 16%, and EPS is 19%, PE ratio 17%, book value is 27. And in this way, these total nifty IT companies, I have taken all the fundamental factors to give the CAGR percentage. And coming to top 3 CAGR companies selected from the nifty IT stocks, and from the net sales point of view, there is Coforge Limited, Mindtree, LTI Mindtree, and from the revenue, top 3 companies, Coforge Limited, Mindtree, Emphasis. In this way, total fundamental factors to be taken according to the CAGR percentage. These are the top 3 performing in the nifty IT selected companies. And coming to discussions, it is found that Mindtree, Coforge, and LTI Mindtree, in order to have higher earnings per share, and in case of net profit, Mindtree, Coforge, and LTI Mindtree, in order have more net profit. And some more discussions based on past 5 years data. The paper finds that Coforge Limited have 16% and revenue, higher revenue, followed by Mindtree and Emphasis. And the keynote is with effect from the November 24, 2022. Mindtree is the leading top 2 company, which is merged with the LTI Mindtree to start the operations from the November 2022. And implication of the study is information technology in India has significantly contributed to the growth of gross domestic GDP and foreign exchange, and also employment generation. And from this study, Coforge Limited, Mindtree, which is LTI Mindtree, and Tech Mahindra higher in their market, financial and investment variables, and suggested to buy the shares since the price may be increases same in future. And in near future, the number of investors to be increased investing in the stock market, and which increases the relevance of fundamental analysis. And now I conclude information technology sector in India, one of the most promising platform in the investment in capital market, and it turns give considerable return for the risk taken by the investors. Thank you.
Question Karen sir.
Okay, do you have an Excel spreadsheet to go with your analysis?
Yeah, sure. In my desktop, sir.
Alright.
Can I show it?
Are you still working on this, or is it a completed paper?
Also working to comparing with other sectors, sir. Also going to technical analysis also with this sector.
Right. When you say that it's a fundamental analysis, any investor who is using the fundamental analysis wanted to know what is the value of the firm. Right, or the share value.
Yes, sir.
Right. So in this sector,
Sir, top 3 today's Coforge Limited share price increases 3.5%, amount of 163 rupees per share, and also LTI also got increases in 3.7% till now. 5 minutes back. And also Tech Mahindra also 44 rupees, 4% increases per share value.
Why you wanted to use fundamental analysis? Is it for speculating purpose or for investment purpose?
Sir, only for investment purpose.
Investment is for future period. Right?
Yes, sir, long term.
Right. When you use these fundamental analysis, we should be in a position to say that XYZ stock value by so and so time, so and so value. These are all the relative valuation techniques or the information that you have taken and tested. This is only one part of the story. The actual value or either what you need to do is, you should see that what would be the estimated revenues of these particular firms, and from that you have to do some and arrive the value. Then only they can say that so and so stock value is going to be XYZ by so. So there is an art form to be done. Probably if your time and your guides permit, better do that so that it really adds value. This is only one part of it, very good at it. But you should go beyond this. In case you wanted to have your career in maybe teaching or in marketing, wanted to be a broker or wanted to be an advisor or wanted to be equity analyst. The actual part is that probably in fundamental analysis, conceptually you must have read the economy, the industry, and company. From there you have to take all the necessary input and arrive the value of this. Okay?
No, ultimately you have to calculate the intrinsic value of the firm. So do you feel that these shares are overvalued or underpriced?
Sir, these are under
All the prices you mentioned are the latest stock market day-to-day movements that everybody knows. But as a researcher, what is your comment whether they are underpriced or overvalued?
it's only, do not consider the basic value.
Okay, you can work on this. Very good. Congratulations.
Sir, all the best. Thanks.
Any questions from the audience?
Question, first presenter, you said you have some question.
Good afternoon to everyone, respected dignitaries. Today my topic is a study on capital market reforms in India under the guidance of Dr. V. Dhananjay sir and Dr. Sheikh Karim sir. Next slide.
Present only.
So, capital market reforms in India have led to increased transparency and efficiency for the investors and market participants in capital markets. So, capital market reforms are critical for economic growth and development, but the Indian capital markets have faced several challenges, including inadequate regulations and limited participation of retail investors. recent reforms in India, capital markets aim to enhance the transparency and improve investor protection, deepen the market and increase participation. The study aims to provide insights into the challenges and opportunities for capital markets in India and promote sustainable growth and development by drawing upon international best practices and experiences. So actually, in morning session, Sir Kiran sir said many reforms, and recently Sir also said many reforms. It's a covering from 1992 and 2023 the capital reforms, very huge capital reforms that came to make the transparency and efficiency in the capital markets to improve the growth for the economy. So these are the capital market structure in money market and securities market and currency markets in our capital markets. The money markets is divided into organized money market. Okay, sir. The few reforms I want to explain is growth in Indian stock exchanges due to the reforms and rising electronic transactions and rolling settlement and growth of derivative markets and reforms in credit rating agencies. The growth Nifty, the contributor to the Indian GDP is from 2014 to 2021 is this table explains, and the growth of NSE in capital markets reforms is very huge. So you see the graph here. And rising electronic transactions, like a very huge amount of electronic transactions from with thousands to nowadays crores of electronic transactions is occurred in our Indian capital markets. And rolling settlements, as Kiran sir said, starting at early as T+5 settlement dates, and now from July 7th onwards, the settlement was T+1 settlements occurred in our capital markets. The growth of derivatives is the Indian capital market has experienced a significant growth and development with the increased liquidity and transparency. The index options are okay. Reforms in trade trading. The credit trading is one of the intermediary participants in our Indian capital markets. It leads to impair the investors' views and also other institutional investors impair these credit rating systems. They provide the credit ratings like underweight, overweight, or buy and sold and hold the securities. This type of credit rating agencies give the ratings to the particular stocks. If they impacted the investor's perception, it leads to invest or disinvest in the stock markets. These are after from in initial capital markets. I took the few years about the IPO's growth. In 2018, 69 IPOs came into existence. Then after 2009, 19, 16 IPOs. And 2020, 14 IPOs came into existence. Then after now, 2022, 40 IPOs came into existence. The highest returns generated is Bandhan Bank and CBS Bank Limited and equities in small finance banks and Frost Defense and Space Technology, Adani Wilmar. These are the highest return generated in IPOs returns from 2018 to 2022. After this is a conclusion of our research activities. When we see the reforms, structural reforms in capital markets, the investors are facing a lot of problems. Due to the structural reforms, they simplified that to give transparency and potential to the investors to invest in our capital markets, participation and awareness in the capital markets. Thank you.
Very good. Actually, yeah, I just want to know from you, what is the book building process?
Sir, book building process is a process. It includes the when IPO came, sir, to estimate that price of the stock before came into the IPO. Check the demand and supply of the stock through the public, how it's valued, the stock price. It's estimated through the book building process.
Very good. Actually, he has answered it in a very right manner, but I just want to mention to the audience that before 91-92, there is a body called CCA, Controller of Capital Issues. They are going to fix the price of any IPO. If you bribe them, they will fix high price. If you don't bribe them, they will fix low price. But after liberalization, what happened? Everything has to be decided by the market. So in IPO, if you fix high price, sometimes the issuer will get benefit, sometimes the investor will get loss. So through this book building process, normally the demand and supply, as you rightly mentioned, will be estimated to some extent. Based on the suggestions taken from the lead managers or underwriters, the company finally decides the price. Very good.
The stock underperforms, the stock must not subscribe, the underwaiters come into existence to support for the IPO.
Okay, very good.
Thank you.
Underwriters development.
You mentioned about credit rating agencies.
Yes, sir.
So what they do?
Sir, they provide they do the research, sir. After the research, they give the ratings for the stocks. Is it
No, they give rating only to the bonds. It's only for debt security. Many debt security to be issued by the organizations. That issue or that, the issue should be rated by the rating agencies, not the bonds.
okay? Thank you, sir. Making the corrections.
Thank you. Any audience would like to have any questions? It's a wonderful session on stock market reforms and regulation post 1992. Because of time schedule, I just would like to close the other session, that is recent developments in India's derivatives market. So I request Professor S.V. Raman Rao sir, Director, SSIM, very privileged to have in the midst of this conference. So sir is a recognized expert in derivatives market, done a lot of research for the past 30 years or so. As a student also I studied his papers in a long back. So I request Professor Raman Rao sir to take over.
ಲ್ಯಾಪ್ಟಾಪ್ ಯಾವ್ದು ಹಾಂ ಸರ್ ಕಿಲಿ ಆಮೇಲೆ ಲ್ಯಾಪ್ಟಾಪ್
Good evening to one and all. At the outset, I would like to thank Professor Dhananjay for giving me an opportunity to stand before you and share some of my learnings to the people who are sitting in this audience. I would like to take only 10 to 15 minutes of your time, and then my talk would cover two aspects of it. One is that basics that is required, one has to know about the derivatives, and the other one is 2-3 latest developments in the derivatives area. In my talk, I would like to take you through what are the derivative products, then very specifically the options, types of options, option size, and then who are all the players in the derivatives market, and then what are the reasons for using the derivative products, and the second half of it, or the second part of my talk would cover the recent developments in the derivatives market. Do you have the course called financial derivatives in your curriculum? Have you studied that? Completed all that? Then probably you are making my life much easier and simple. So the first question to all the audience here, who are the finance students, major finance, what are all the derivative products you have heard or come across? Index futures, okay. Index options, stock futures, stock options, okay. Currency derivatives, okay. Right. These are all the various products that's been available for trading in the marketplace. However, one has to understand that when somebody is seriously looking for what are all the derivative products, then
From Mohanbabu University to join the panel.
okay.
Round of applause. Sorry for that.
No problem, sir. Predominantly, there are 4 different products that are available in the derivatives market. It's been called as futures, options, swaps, and then forwards. Forwards and futures are very similar in nature, except that there is only a thin line of difference, that the forwards are not being traded in the exchanges, whereas futures are traded in the stock exchanges. The same way, the swaps are the other products which are not being traded in the exchanges. So there are only futures and options out of these 4 that's being traded in the stock exchanges. That's why it's being called as exchange traded products. The forwards and swaps comes under the category of the over-the-counter products. These are all, it's like a mutual contract between the 2 parties. So when you compare the exchange traded and the OTC products, the OTC products have got more risk compared to the exchange traded products, for a simple reason that the counterparty may become default at any point of time. Take for example, when you enter into a contract with a bank for exchange of your dollar with the rupees. Assume that your sibling is in US and sending you the dollars, and then you wanted to convert that into the rupees, right? So then you negotiate with the banker, and then you promise the bank that I am going to pay you $1,000 and you give me rupees. So there you will be deciding what is the exchange rate. But unfortunately you did not receive money, and then you cannot fulfill your contractual obligation. So these kinds of risk will be there in case of the OTC products. But when it comes to the futures and options, that's why in Indian stock market, or whether you go to the BSE or the NSE, you come across one segment called F&O segment, futures and options segment. So there you have these 2 products, and where the default risk or the counterparty risk is a big 0 there. There is no counterparty risk in case of futures and options, because there you have a mechanism wherein the counterparty is the clearing house. It's not the other one who is buying or the selling. That's the reason why there is no default risk in case of futures and options. So what are all the 4 products that's available? Forwards, futures, options, and swaps. Okay. Now, futures are like, are forwards both, conceptually it is the same. It's in a contract between the two parties wherein you are going to decide well in advance what is the price and then at what date you wanted to execute your contract, what are all the deliverables, everything will be defined very clearly, and then on the maturity date you will be executing your contract. Can you buy 1 year contract or 1 year futures in Indian financial markets? Can you buy a future contract for 1 year maturity period? So what is the maximum period? 3 months. Right. So you have, sir, I think he deserves one more chapter.
Yes, yes.
Now the 3 months that in market parlance is being called as current month, year month and par month. Pardon? 1 month, 2 months and 3 months. Current month, year month and par month. No problem. Here, okay. Now, let us assume that you have purchased a 1 month contract. Normally, in 1 month contract, what will happen? You are entitled to get 30 days, isn't it? 1 month means 30 days. Do you really get that 30 days period for a 1 month contract or the current month contract? No. Because all these derivative products, futures and options, being settled on the last Thursday of the every month. Suppose if Thursday happens to be on a holiday, the previous day, that's Wednesday, is the closing day for the contract. That's why you don't get that the period that you wanted to have. When you say the current month, then the day on which you are purchasing, and then that month last Thursday is the contract closing day. So please remember that. When it comes to the futures, it's a mark-to-mark mechanism that's being followed. What is this mark-to-mark mechanism? Normally to buy, whether it is a cash market or the derivatives market, the broker will allow you to buy based on the margin money or the deposit or the money that you are keeping with the broker. So based on that, then here you will buy the futures. Future contracts you can buy, and then these contracts are being settled every day automatically. Let us assume that you purchased at a particular level. Today let us assume that Reliance you purchased at 2,700 or so. By the end of the day it went up to 2,800. And in futures and options you need to buy on a specific lot size. Probably you must have gone through this particular one. For every stock there is a lot size that's available, whether it is index products or the individual stock products. Everything has got a lot size because these futures and option products are standardized. So for that the lot size has been derived. I will come to that little later. The logic for the lot size. Now the lot size into the increase in the price. Let us assume, as I mentioned, Reliance you purchased at 2,700 and end of the day it went up to 2,800. There is a 100 rupees increase in one Reliance stock. Let us assume that the lot size is 100. So 100 into 100. To that extent that money will be credited to your account and that will be closed. Next day morning again your account will show that you are purchasing and again closing. Suppose if the price has fallen down, your margin money will be depleted, and this process will be going on till the date of the maturity. This is called the mark-to-market mechanism. This mechanism being followed for the futures contracts. We'll come to the options little later. Okay. Now, what for these products are being used? Why futures being used by the people? For that matter, derivative products are being introduced in the Indian market in the year 2000, if I am not wrong. That's in a year started with the index products. So basically to manage the risk. The Indian capital market, to grow and enhance, the risk management products were not available. That's why NSE has approached it to the SEBI, if I am not wrong, in the year 1998 or so. Then SEBI has constituted LC Gupta committee to study the feasibility of introduction of derivative products in the Indian markets. Then the committee has studied and then came out with the proposals, and then it's been submitted to the SEBI. And in fact, they recommended that there should be a separate exchange for trading of the derivatives. For some reason or the other, the SEBI has permitted the stock exchanges to have a separate segment in the stock exchanges itself. That's how the derivative products have come to the existence. So when they have introduced, the basic purpose is to use these products for risk management. So how these products can be used to manage the risk. So to manage the risk, or if these products are used for managing the risk, it's called hedging. Okay. So for hedging purpose, these products can be used by the investors or whoever is interested in the market. Okay. And then when it comes to the different players in the derivatives market, there are people who will be using these products for risk management, then they are called as a hedgers. There are people who are interested to make a lot of money, they will be using these products, they are called speculators. And there are people who will be observing the different markets and trying to exploit any discrepancy in the markets. They are called the arbitrators. These are the three different players that you will find in the derivatives market. Now, I mentioned that lot sizes are there. And when these products were introduced, the SEBI is interested not to allow the retail investors to participate in the derivatives market for a simple reason that if people are not well aware of how to use of these products, it's going to hamper a lot, or it's going to affect them very, very badly. Let me share one latest study that has been brought out, and they mentioned that one in 10 are going to make profit in the derivatives market. Rest of all is going to suffer the losses. Because if you see the Indian markets, or rather the players or the people who are participating in the markets, most of them would be going by the advice given by either their friends or the brokers. We don't know to what extent they are completely aware of or knowledgeable on these products and the investments that go into that. Without knowing these products, without knowing how these products are going to be used and helpful, if people are using for the sake of just investing, that's not going to help them to make a profit. Because we are very greedy, let's accept it. We always wanted to make the profits. So, in the process, there is a probability of committing a lot of mistakes rather than committing less mistakes. So that's the reason why the study has found that majority of the people are incurring the losses. Only few percentage of the investors are making profits in the derivatives market. You can ask me why not in the capital markets? In the capital markets or in the cash segment or in the stock market, the cycle like what we are talking about, derivative products, futures and options, have got a limited life cycle. The maximum maturity period is 3 months. But when it comes to the capital markets, once you buy it, if you don't like to sell it, it will be there with you throughout your life. But when it comes to the derivative products, it's not the case. There's a specific shelf life or either product life or the maturity period. That's the reason why, because the period is very short and people cannot predict exactly unless they are unless they do a thorough research. But most of the retail investors who are coming into the market, they don't do that research. That's the reason why they incur huge losses. So, when people wanted to use these products, need to be more knowledgeable, well informed, then only these products can be used for the intended purpose. The intended purpose is risk management. So to discourage the people or the retail investors' participation, SEBI has come out with a clause of saying that 2 lakhs worth of investment is required. From that, those days, even today, they are deriving the lot sizes for indices as well as the individual products. Now the latest, I think in 2023 itself, maybe June or July, very recently, they said that 33 stocks they have revised. The lot sizes have gone up. Why it's gone up? Because whenever there is a change in the underlying stock prices, the value of those, multiplying that underlying stock price value with the lot size will come to that 2 lakhs worth of it. Now they have revised, made it as in between 5 to 10 lakhs. And it has gone, they have revised 33 stocks, lot sizes in that. Very, very notable one is, if you see the idea stock, the lot size earlier was 70,000. In the revision, they made it as 80,000 because the stock price has fallen very drastically. So the lot size concept has come into the picture basically to protect the interest of the retail investors. Now when it comes to the options, there are two types of options we can say. Probably you must have heard that call option and the put option, right? So is there anyone who can tell what is a call option or what is a put option? Mic comes to. Yeah.
Q is release first, then we take the call option.
Okay.
When V is bearish, we take the put option.
Okay. How does it work? Put option, like for call option you are buying, for put option you are selling, right? So is this two are buying and selling, or is there anything beyond this?
Call buyer and only the right, but not the obligation to purchase the underlying asset.
Let us assume that you wanted to buy a Reliance call option, right? There must be a seller for that, right? So who could be that seller? Because I am focusing much on this because this conceptual knowledge and the clarity is required. Otherwise, most of the time, people do confuse with this. Yeah.
Can I say simple terms?
Yeah, you can.
Accounts లో ఒక రూల్ ఉంది
Ah,
ఎవరీ డెబిట్ హ్యాస్ ఎ క్రెడిట్.
correct.
అలాగే ఇక్కడ మనకి ఆప్షన్స్ ఫీచర్స్ లో
Forget about the future because let's not club this. These two are different products.
ఆప్షన్స్ లో కూడా అలాగే one person loses, another person wins.
Accepted. That's why it's being called as a zero-sum game, right? Now, my point is, or your question is, when you wanted to buy a call option, who is the seller there?
Good buyer.
Anyone else wanted to attempt it? Wanted to make guess of it? Or is your friend is right or wrong? No, when you wanted to buy a call option, there must be a seller, right? Who is that seller is my question, that's all.
All sellers, sir.
Yeah. Even for put also, when you wanted to buy a put, there must be a seller, right? So who is that? Right, sit down. See, normally people think that because call option is, when you buy a call option, you get the right to buy. When you buy a put option, you get the right to sell. We normally think that these are the two will be interactive because there is a buyer, there is a seller. But unfortunately, that's not true. The call buyer, there is a seller for the writer, option writer, the call option writer. The one who will be selling, will be selling that. When you buy a call option, you get the right to buy. So for that, buying, there is a seller. That seller is called the option writer. In the same lines, when you buy a put option, there is you get the right to sell. For that, there must be a seller. Again, there also you have the option writer. Normally, these option writers are not the retail investors. Because it's a very, very risky proposition. That's why the regulations are very stringent. There's a lot of, most of these are the professionals who will be doing this particular one with a lot of backup in terms of the network that they need to maintain. Okay. To make this concept very simple and easy, I think in Nellore you have a good number of theaters, right? Movie theaters, multiplex and all, right? What's your name? Venkat. Right. Who is your fan? Pawan Kalyan or
India.
Junior India, right. So let us assume that Junior India has released in a movie, or rather his movie has been released and it's been going to play in one of the multiplexes. So Venkat has sponsored all the classmates to take them to the movie. He purchased almost like 60 tickets, reserved that one for you. Now what happens is when you buy a ticket, you get the right to watch the movie, isn't it? That's what exactly, in the call option happens. But unfortunately, Professor Dhananjay has scheduled a quiz or the test on the same slot. Now you are confused what to do. What you will do? You will bunk the test and go to the Junior India movie, isn't it? Is there any chance for you to defer your, movie, watching of the movie? Can you say to the theater owner that no, now we have a test, we will come in the other show? Do they allow? Pardon? Actually, you request your professor to reschedule the test, right? Fine. Now the logic is very simple here. Once you buy the ticket, you are getting the right. Similarly, in options, whether you buy a call option or the put option, you are getting the right. And after that, to exercise your right, it is your prerogative. There is no hard and fast rule that you need to exercise your right. Once you buy the ticket, what will happen? It is all up to you whether you wanted to watch the movie or not. Suppose if you don't like, you can simply tear off that ticket and throw it, isn't it? Or else what you can do, you can send to somebody else. Or else, if you don't do anything, your ticket will expire automatically. The same kind of analogy would be applied to the options also. Once you buy an option, you are getting the right. But there is no hard and fast rule that you should exercise your right on the maturity date or on or before the maturity date. If you exercise, you may incur a profit or the loss. Obviously, people who are in trading, they don't exercise when they see that there is a loss in their contract. They exercise only when there is a profit. Then when there is a loss situation, what do they do is they simply keep quiet. The option will expire automatically on the maturity. Like in a movie theater, if you don't watch the movie for the given scheduled one, your ticket is an expired one. So there what will happen, you will lose the money that you have paid for buying of the ticket. In case of options, you need to pay the option price or the option premium. So the premium that you have paid is the loss for you in case of options. Okay, so this is what is the beauty of the options. Most of the times in speculative purposes, options are being used. Your friend Venkat has rightly mentioned, when you foresee that the market is going to increase or a particular stock is going to increase, obviously you wanted to encash this particular information that you have. So further two options. One is you have to buy the stock, wait for the stock price to go up, or otherwise buy or use the call options, buy that particular stock call option, wait for 2 months or 3 months and then exercise it. So in the second case what will happen is, with less amount of money, you will be getting more number of contracts because you need to pay only the option premium, and then on the maturity date you can enjoy larger benefits. The maximum loss in case you incur is the premium that you have paid. I think I have given enough inputs on this. Swaps are the another product which will come under the OTC market. It's not being traded. You have the interest rate swaps, currency swaps and the asset swaps. In case of swaps, what will happen is, swap is the exchange. You wanted to exchange. Let us assume that you have taken, sir has mentioned that when he has purchased, 17% is the interest. That's a fixed one, if I am not wrong. And then, after some time when the interest rates were falling, if we are interested to move from fixed rate to the floating rate will help us to keep based on the market rates. It may go up and falls down. Then the swap dealer will come into the picture. They will design the swap contract such a manner that the fixed interest rate obligation will turn out to be a floating rate. That's how the swaps will work out. But we need to remember that whatever the loan and the interest rate that is there, it will remain same throughout the swap period. But the transaction that will happen will help us the net benefit of converting from fixed to the floating. Similarly, if somebody is interested to swap from floating to the fixed, yes, it can be designed. That's what is the beauty of the swaps. Then, as I mentioned, forwards and futures are the same, except that the place of trading. Now, let me look into the latest developments with respect to the derivatives market. As per the newspaper report of 2nd July 2023, Indian derivatives market turnover has reached a record high. The turnover is to the extent of 8.28 lakh crores. In 1 week, there is a 37% growth from previous week to the current week of it. And this has really made there is a lot of momentum that is happening in the equity markets that has resulted into the growth of this one, and also the FIIs have become very, very active. In addition to that, the retail investors, post-COVID, yes, the number of participants of retail investors have gone up, and earlier, when we started, or when the derivatives were introduced, majorly it is the brokers and that the professionals used to be the major players. In addition to that, high net worth individuals or the retailers who have got more wealth to trade. But in the recent past, even in towns also people are talking about the derivative products. That's an indication that this knowledge or the awareness has penetrated deep into the customer minds or the retail investors. So their participation has really making the markets to move upward. There is a close nexus or the link between the derivatives market and the equity markets. These are all, I would say, interlinked and interdependent. Whenever there is an upswing in the equity markets, obviously you will find the same kind of trend or the momentum in the derivatives market. Because after all, the value of the derivative product is being derived from its underlying asset, nothing but the equities. Okay, so that's why the turnover has really gone up. And for the year 2022, there is an association called Futures Industry Association. So as per their report, NSE has emerged as the world's largest derivatives exchange. This is one of the world's largest derivatives exchange because the kind of volume of the trade that's been happening. The another latest development is Financial Services Index is a new index. The derivative segment has been introduced, and as of now, if you wanted to know the different kinds of products like your friend has listed out, you can trade futures and options on Nifty 50, Bank Nifty, Nifty Financial Services. These are all indices. The index mid-cap select, mid-cap 50, public sector enterprises indices, infrastructure index, IT index, CPSE index. In addition to that, there are around 200 individual stocks on which the futures and options are available. Now in the NSE itself, you can do the trading on indices, you can do the trading on individual stock futures and options. There are commodities, derivatives are available, and currency derivatives and interest rate derivatives. But above all this goes that the index and the individual stock derivatives are highly popular. And also the NSE is contemplating to introduce there is one carbon derivatives. On that they wanted to come out with a derivative products, and still it is in the initial stage, and then initial groundwork is going on. And also recently NSE introduced trading of weekly futures on US dollar and Indian rupee currency pair. There is another latest one. And recently Bank Nifty options lot size has been reduced. Earlier it was 25 and now it has brought down to 50 because the value of the Nifty, Bank Nifty has gone up. That's why they have brought this particular change. There are some stocks which were banned as per 14/7/23 report. There are stocks like Z10, PNB, Manappuram, India Cement, Hindalco Copper and Delta Corporation. These stocks were banned for trading because there is a concept called MWPL, market-wide position limit. 95% is a limit. Once it touches, it's going to stop the trading for some time until it comes to the below this particular level. Even when Adani episode was happened, Adani stocks were banned because it has gone beyond this prescribed or the threshold limit. There is one concept. With that I will close this one. There is a concept called rollover. Like earlier in the stock market discussions, we understood that we can carry forward and all. So here in derivatives also, especially in futures, for options this facility is not there. Here rollover in the sense, suppose if you have a position in the market and it's going to expire very soon, but you are not trying to make, or either you don't get the profit that you wanted to make. But in near future it is going to help you. So what you have to do is, either again it's a long rollover or the short rollover. Long rollover is a buying, short rollover is the selling. So in the rollover concept, what will happen is, you can close your position immediately. Within 1 week of the expiry date it should happen. Then again you will buy and then wait for the next one. But whatever the margin money, brokerage charges, you need to pay. So through that you can postpone your trade and get the profit that you are planning to get it. So with this note, I would like to thank all of you for giving me an opportunity, and if you have any questions, yes, feel free. I will try to answer. Thank you.
Because the derivative is a ocean and that is enlightened us because huge amount of trading is being done. Particularly, the trading has shifted from futures to index options. So almost 90% is being done in index options, particularly Nifty and Bank Nifty options. That is due to shortage of time. I would request Professor Sudarshan Murthy from Mohan Babu University to enlighten us with his comments.
External professors on the dais, my dear colleague friends, student friends. Good evening to you all. This is Professor D. Sudarshan Murthy, School of Commerce and Management, Mohan Babu University, Tirupati. Since morning, I sat there and observed. Speakers are excellent. Excellent speakers, but you have not utilized their speeches. That is only the criteria that causing me some heartpain. Because of each and every speaker, practically they have done and they have seen the entire the research, that research knowledge that feed it to you. But anyhow, coming to the panel discussion, myself, I would like to bring to your recent, bring to you some recent trends with regarding derivatives market. As Rajesh sir said, 1991 industrial policy. Yes, sir. A bold step given by Manmohan Singh sir. At that time, our Indian position was very critical. We are not in a position to balance the balance of payments. We merged our gold with London, brought some money, and with that we settled. How long? Is that questionable? Immediately, the former Prime Minister, and I proudly say that earlier he was a professor, economics professor, given a good solution to entire India through by preparing of a 1991 industrial policy. More than 30 years back, he was prepared the same 1991 industrial policy as the recent one given also. Because of, he has taken all the constraints and prepared. They have bold step, that step was a bold step. That is only the root cause, giving technological freedom as well as the financial freedom and everything. Because of many companies they came, and our Indians are also moved somewhere and they have started doing the business. Then immediately innovative ideas came into picture. That innovative ideas they converted into a service-oriented. That has given a good business to all the world, the entire globe. Globalization, the meaning of the globalization, I will define in a sentence. Integrating a country's economy with the world economy is called globalization. Due to that, many systems that have been developed. For example, as Raman Sir said, that 4 products regarding derivatives, only the 4. The entire market roaming the core products, and the core of the flavors of a underlying asset. It would become an underlying asset. Immediately, suppose you are mark to market the concept. Earlier, when stock market was there in 1990 till 1994, there was no screen-based, floor-based type of trading that was taken place. Behind the curtain, what is happening, not known by me, not known by anyone. We were experienced. All the persons sat on the dais, we were experienced. When we want to purchase the stock, we approach with the broker, whatever that we tell, we have to listen, and we have to pay money through by taking the DD, and we have to wait, and after getting the stocks, then we will take back the stocks and coming down, put it in a bureau. That is Alamara. That was the process. Behind the curtain, what is happening, we don't know. But now, screen-based, everything is transparent. And sir said, another one is also startup concern about that Zerodha app. When you take the Zerodha app, primary market, then you will enter into the market, then you will purchase whether it is, that has been allotted or not, known by you. It's a transparency, it's a technology. Recent developments, these are all. And Zerodha is offering a commodity market also, MCX. And you can purchase whatever the commodity that you want, and you will enter into the Zerodha app, then you can do. There is no need of the brokers, but there are some challenges are there on part of the investors. My dear students, from this platform, practically, I am giving one idea, you please follow. I have not followed. As a commerce-based student and as a management student, I have not followed. Now I am suffering. What is my idea is, fortunately when you get 50,000 job, you think that your job is only 25,000. Rest of the 25,000 you can save somewhere. That saving habits, then you have to develop. Whatever the salary, suppose you are receiving a 20,000 salary, your salary is only 10,000. Rest of the 10,000 you have to save. That saves your life. That savings allow you to live your life as a legend. I am telling, please note down. Because of practically, I am suffering now. I am bringing your notice. One thing that I told you, the foreign name also given by Sudhakar sir, Professor Sudhakar sir. I have organized one FPP program regarding the commodity derivatives. There itself, speaker I have searched, Professor Sudhakar sir, I think well known to you sir. Yes. He has given number. Fortunately, that Srikanth Koundinya, Vice President of MCS, and he brought online as well as offline to the college also. And especially I am bringing to your notice, your Dhananjaya sir is a keen listener. What is his listening capacity? I have seen through by online. Through by online. No, don't give the class. Listen is a skill. No, his patience. Not into anything. I am not in a position to listen like that. Openly speaking, that type of professors that you have, utilize there and learn the skills also. In that context, I am bringing to your kind notice. Say for example, you are earning 50,000, 25,000 you can save, and there are two kinds of assets in the investment market. One is real assets. Real assets you keep far away. You can select, first of all, the financial assets like a post office PPF, Postal Provident Fund. You deposit at least 10,000 rupees per month. At the end of the year, you will get 1.2 lakhs. That is 1,20,000 rupees. With 8% interest rate, it would reach us 1,30,000. In next year, again you are depositing 10,000. It is around 1.3 plus 1.2, 260 plus 20,000 maybe additionally. After 6 years or 5 years, you can see your balance. That balance may be utilized for some other purposes. Invest in real estate. Multiple your money. So that additional income may be possible to you. Coming to derivatives market, you take the Zerodha app from your laptop itself. Artificial intelligence. Through by artificial intelligence, what is the price prediction may be known by you. That is the skill. Say for example, you are the marketing guy. Your close friend is a finance guy. You can ask the portfolio and what is the price that you are going to increase. Myself, some bad times that I have observed. That is, I have faced. That is, I have selected one portfolio during 2018 to 2020. I have purchased some stocks, but due to my mother ill health, I sold away in the year 2020 when it was Corona period. If I kept all the stocks till now, my net worth today is nearly 24 lakhs. Believe me, I have purchased the stock of Reliance Power. Now it is 1 rupee. Sorry, at that time 2020 it had been touched 1 rupee. I have purchased in between 150 and 1 rupee, nearly 85,000 stocks. Now the price of the same stock is around 14 to 15 rupees, and that has been touched with 24 rupees also. You can imagine, only one stock that I brought your notice. You the students, learning the subject is okay for writing the examination. Don't learn the subject for examination point of view. To lead your life, learn the subject. Because of each and every faculty member will come here. See the students how many are. To whom your professor conducted this. My students are also the same. Exactly 5 years back, the students were different. 10 years back, the students were quite different. Now, even now also, they will come to the college and they will ask me and the rest of the faculty members, how are you, sir? And sometimes they will call me also. But now the student is businessman. You are the MBA, Master of Business Administrators. You are looking. The faculty is also business. As a business magnets. Okay. Anyhow.
Due to paucity of time, we will interact during the question and answer. You can come through.
Okay, sir. Only 2 points are there. I would like to bring to the notice, sir. Next is Asia Pacific is the world's largest market for derivatives, accounts for 40%, and followed by North America 30%. Global derivatives market size is projected to reach United States 39,170 million by 2027. It is the objective. And 2020, it was only 21,980. Fast moving market is derivatives market. There's no transfer. Especially the commodity derivatives market, daily it has been growing. OTC market is also the same. Equity derivatives are also being developed. But anyhow, due to the lack of time, I am concluding my sharing knowledge regarding this recent development Indian derivatives market. Finally, what I am telling you is, my dear students, whatever the savings that you have, you can invest elsewhere. Keeping your money idle is waste. Thank you for giving this opportunity. Especially my special thanks to Dhananjay sir, given a very good ample opportunity, and my friend Karim. He has been with worked me since long back, nearly 7 years. 7 years is a model person in the department. Whatever the work assigned by the management, you will do and finish it Suppose if I ask whatever it may be the help now, he will do. Under my direction, he worked in network also. What Karim? Worked. So a very good, nice friend, God gifted friend to me. Thank you, thanking you one and all.
Thank you, sir. It was wonderful, amazing to listen, combined with the wisdom that is advice for students. Very nice, sir. We'll take a couple of, can you please ask them to present?
The students are come so far from Chittoor, sir, come next side.
Great.
Yes, sir.
Below one, sir, the last one. The role of capital market, last one. This one. Good evening everyone, good evening panel. Myself S.K. Samuel, I'm pursuing MBA first year in Vemu Institute of Technology from Chittoor. So today I'm here to give a paper presentation on the topic called the role of capital markets for sustainable growth. So before getting into the actual topic, let's just briefly know about what is a capital market. As you all everyone is from the financial background, right? So capital markets refers to the venues where funds exchange between the suppliers and those who capital for their own use. Basically, here the suppliers in the capital market are the typical bank investors, and while those who seek capital are the government and the individuals. In this capital market, we have So let us briefly know about the Indian capital market. Here in this Indian capital market, they are effectively monitored and governed by the SEBI, which is the Security Exchange Board of India. And these are the functions of the capital market, which are the finance the economy, promote liquidity in market, provide funding alternative and effective price discovery. And now talking about the challenges of the Indian capital market. Here, these are the challenges of the Indian capital market, which is inflation. What is an inflation? We all know that the gradual increase in the price of the goods and services, which reduce the purchasing power. And here we have the lack of uniformity of tax reforms, and then about the population, which is a major challenge for an Indian capital market, as we know that India is the second largest populated country in the world. And talking about the illiteracy, though in India we have, it is a recent, according to the recent report published by the National Survey of India, the literacy rate of India in 2022 is 77.7%. Though the literacy rate is increasing in India, but still the increment is very low, which is again a matter of concern. And talking about the steady growth of industrial production, and the another challenge is about the poverty. We all know that about 37% of Indian population is below the poverty line, and the main reason it could be like uneven distribution of the wealth in the economy. And here are some suggestions for the growth of the Indian capital market, which could be like to focus on the other instruments like mutual funds other than the equities, where the funds are managed by the big firms and portfolio managers, and to expand the retail investor base for a developed capital and also enhance the investors' moral and domestic allocation.
Talking about, and finally, what I want to conclude my topic is that we all know that after the 1991 economic reform, the growth of Indian economy has gradually increased, and we have seen a lot of changes in the capital market. But due to the increase in the level of the competition, we still backlog at some certain areas. Here, we need to have an effective framework of the economy to a level which we can cope with the challenge of the growth. Finally, here we can, the foreign direct investment should be allowed in the various sectors to attract the foreign investors so that the growth of the economy will increase. Thank you so much.
Good effort. Thank you. What's your name? Okay. You mentioned that the population is one of the issues, right? In the recent past, if you look into the various news reports, India has got a demographic benefit, right? That's because of the young population or the eligible working population. That's going to help India to emerge as a equal group, even in all the sectors. That's not at all a limitation or all. In fact, it's more favorable situation. Second one is now we surpassed China. India is the most populous country in the world. We have already crossed China's population. Okay, and also that you are making these recommendations about the policy government, it's too early to talk about those things. Okay, unless we study thoroughly, we can't do it. Okay. That is the next.
Very good evening everyone. Very good evening everyone. My name is Desmobale. I am born and brought up in Chittoor, Andhra Pradesh. I am pursuing MBA first year business, Government Institute of Technology, Pakala, Chittoor. Today my topic is about study on social stock exchange in India. Coming to the introduction, the social stock exchange is a platform for listing social enterprises that are focused on addressing various socio-economic issues. The social action stock was discussed in the budget 2019 and 20. The SSC are regulated by Security Exchange Board of India, accepted by a National Stock Exchange. It provides an alternative fundraising mechanism for non-profit organizations. The main concept of SSC is to gain the profit for investors, and SSC has been proposed as a necessary step towards democratic and popularizing input impact on investing. And the objectives of social stock of exchange to promote, develop and evaluate a regulated market for detailing in securities, and to enable for flow of capital into most effective industries and raising long-term capital. The social stock exchange in India. SSC has delivered a global awareness following India's financial minister Nirmala Sitharaman. SSC would function as a separate segment within the existing stock exchange. The NSE provides social enterprises like NPOs, not-for-profit organizations and engaged in eligible activities. The eligibilities of a social stock exchange is list of eligibility activities for democratic primacy of social impact, target segment, like social enterprises, target underrepresented or less privileged population segment, or regions regarding lower performance in the development priorities. The challenges of social stock exchange, misuse of funds, lack of resource with non-governmental organizations, so as it's difficult to maintain their financial record. There is no proper framework for social impact assessment. And finally, the aspects of legal differences between social enterprises and normal enterprises. Finally, the conclusion is to on SSC is SSC will gain the investors to get profit, and in the SSC there are two types, NPO and NPO and not NPO stands for not for profit organization, and
Thank you. Interesting topic. Very nice. Please improve.
Thank you.
Next. Times are in the interest of time. We will. Directly go to objectives. Objectives. Okay. You can explain this methodology.
Growth potential. Thus, the study of uses the parameter like market size, market liquidity, market turnover, market monitoring, and market efficiency. Thus, the performance of Indian capital market.
Analysis. The size of capital market as measured by stock market capitalization is positively correlated with the ability to mobilize capital and diversity in economy-wide basis. The size ratio of Indian capital market is shown in table 1. Market size, BSE and NSE, they are referenced from 5 years, 2015 to 2022. The ratio analysis increases and decreases.
Market liquidity refers to the ability to buy and sell of the securities easily. Liquid capital market allows companies on the one hand have permanent to access the capital through equity issues, on the other hand to allows investors. The market liquidity is measured by the ratio of total value of share related to GDP. The liquidity of Indian capital market is shown in table 2. Market liquidity PSC and NSE percent. In 2019 and 2020, 30.67 and liquidity ratio NSE percent 72.72.
Market turnover. The market turnover gives total value of shares traded in relation to the size of market is the most important indicator of market activity. It is calculated at the ratio of total value of shares traded to the market capitalization. The turnover ratio is also the indication of market liquidity. This ratio for Indian capital market as shown in table 3. Market turnover BSE and NSE. Same reference to 5 years we have taken. Increases and increases.
Market volatility is the degree to which asset prices tend to fluctuate. Volatility is the availability or random of asset prices. This research focus particularly on time series volatility behavior in Indian capital market. Thus, the Indian capital market is not efficient in its peak form. The market efficiency is an indicator of the potential allocation of protocols into Indian capital market of India.
Conclusion, this paper is an attempt of access empirically the performance of the Indian capital market in the aftermath the global financial crisis in terms of the market parameter like size ratio, liquidity ratio, turnover ratio, market volatility and market efficiency. The evidence of growing market size, market liquidity, weighted volatility and weak from inefficiency of market. Thank you.
Because technology is the music to our ears. The panel members, I request Professor Raman sir to comment.
All the best. Good luck.
So the marathon session, I appreciate the patience of the panel members and some of the remaining audience, of course. And we'll distribute the certificates. And before that, I would like to felicitate the panel members. I request the volunteers to make, some more people to just arrange the I request Professor Raman our purpose. Please, sir, Raman. Please bring shalwar.
Bag also is there. With you there. No, thank you. Very good. Photos set up.
Please, police.
Sir, Give a round of applause. Remaining the audience. Next.
Good evening to one and all. The time for distribution of certificates. Invite our dignitaries, special guests for distributing the certificates. I will call the name. Dr. Akhtar Sultana, Dr. K. Reddy Sai Ravan, Dr. Shyam Sundar for presenting a paper on breaking the glass ceiling. Now, Professor Bhupati Chalagundu and Ms. S.K. Savina. From Wave Institute of Technology, Chittoor.
Very much appreciate coming far from this. You just give your feedback. How you have.
It's a really amazing experience. Thank you so much, sir, for sharing your valuable words. Yours from Mohan Babu University. I could recognize you, sir. I have seen you once. And thank you so much, sir, and everyone for sharing more knowledge. I'm a fresher and I'm still haven't selected my major. And after attending this conference, I'm sure I'm going to select my major as a finance. And I would like to take and more exposure about that. Thank you so much, sir. It was really wonderful coming over here and I got to learn more things. Thank you so much. Really appreciate it.
Special effect and moment from team. Now, Mr. K. Venkat Krishna, Dr. Gangirejan Sanjay and Dr. Shekhar for presenting a paper. The study on capital markets reforms in India. Mr. S. Mubarak and Professor Shobha Was from Wave Institute of Technology, a study on social stock exchange. Now next, N. Praveen sir and Dr. Murugesan Dev from Wells Institute of Science and Technology and Advanced Studies for presenting a paper on scrutinized approach KLM. Now, I invite Dr. Sheikh Salim from Vellore Institute of Technology for presenting a paper on firms' characteristics and profitability, the study of food and agro product firms in India. Now I call Alla Venkat Subbareddy, J. Vijita and K. Neelakam Marikanta from Vikram Sumatra. Now Jyoti Darshani from Wave Institute of Technology, Harshita from Reddy from Wave Institute of Technology.
So we will have a group photo and then vote of thanks by any of
Anyone can do the vote of thanks or their feedback. It's most welcome.
Any feedback from the participants or paper presenters, you can just share with us. Come sir, come on. Discuss for that is go for the group photo, which stand downstairs so that other people.
So participants, for information, since trend is changing, the conferences are from offline, they are converting to online. Now it's ours hybrid. Actually tomorrow we have maximum number of papers. That is almost more than 40-45 from all. That will be in the online mode. You can join.
I request all the stand up. Students are
This is an amazing experience. I just vote of thanks by Madam or Dr. Vani Madam.
Very good evening to one and all. Since from morning to now this time, we have to learn about the Indian financial markets and its impact on Indian economy. From beginning session with share by stage, share by Adisha and also Susan Thomas. Both are explained regarding the how the Adishas are completely covered. The dollar, how strengthening the international market, overcome the Indian rupees. At the same time, Susan Thomas also covers regarding means what are the recent trends like as financial